Good morning, traders. I'm Dennis Dick.
And I'm Joel L. Condon. Welcome to Premarket Info.
Well, it's a slow day today, but we're going to start off with a little bit of market structure. We're going to analyze the Citigroup mini flash crash from yesterday. We'll look at Philip Van Heusen's earnings, but I think you can expect tight ranges here all week. Labor Day coming up next week. This is like the last real week of summer, and a lot of traders are taking advantage of that. And we'll look at all your key technical levels in your Big Ten.
And if it's a slow day in the pre-market, what does that foretell for the actual trading day?
It foretells this whole week is going to be slow, Joel. I just can't see how you're going to get action here this week. We know traders take, this is the last week of summer. They're taking time off. It's been slow even before this, so it's predictable that this week would probably be the slowest. But it wasn't that slow in Citigroup around 10:29 yesterday morning. We had this Citigroup. I've just got the chart up here for you, and I'm talking about this area right here that I'm highlighting. It had a mini flash crash, and what was happening is actually, and I did put a piece up there if you want to read the details. It's up there on the Premarket Info blog there. But at 29.80, somebody placed a million share buy order. When's the last time you've seen a million shares? You don't see that very much anymore there.
No, I guess they were. I haven't looked at the charts yet, but I guess they were picking their point on that one.
Yeah, 29.80. So they placed an order to buy a million shares at 29.80. Obviously, everybody takes note of that huge order. And for about 7 or 8 minutes here beforehand, it's just trading, bouncing 29.81, 29.82, 29.83, down to 29.80. So a lot of participants buying ahead of that order because they can lean on that order. But then all of a sudden, it whacks out 70,000, and then another 600,000 of it trades out, leaving only about 100,000. So instantly, all your high frequency traders, all your internalizers, anybody who's obviously the quickest, the co-located traders there, hit out the remainder of the bid, and then it just leaves a vacuum below, and you basically have no liquidity, and the stock trades down in that same second all the way down to 29.42. Bounces up a little bit, obviously, and then continues, and then eventually it does come back. But if you were sitting stops out here, if you're leaning on that 29.80 trying to make a penny or two, and you have stops below that, you probably got stopped out, maybe down even near the lows.
Yeah, I mean, this stock is it's bounced off a 25 or 24.91 level. It's kind of hit a peak here. Just really been trading between 29 and 30 over the last couple days. I have to keep an eye on that 29.02 low for Friday. That'll be a reference point on the downside. Could just be gathering a little momentum here to head back up to that $32 level.
Yeah, hard to say where these stocks are going overall, just giving you the whole technical there. Hard to say, but you do have this uptrend going in Citigroup there. So if you're trading it from a technical perspective, maybe you could argue that it's starting to look bullish here on the chart. You did break out from that whole consolidation area that Joel was just talking about, but the moral of the story, what I was talking about with that Citigroup thing, is you've got to be careful if you're sitting in front of bids. Like traders used to do this for years and years. They'd sit in front of bids and sit in front of big offers. But if you're doing that now, the high frequency traders are so much faster that you basically can't get out quick enough to hit that bid, and you can get caught into something like that vacuum area where everybody is looking for liquidity and there's a big washout trade. And that's kind of what you've seen in Citigroup yesterday. But if you're interested in reading that more, there is up there on the blog. Philip Van Heusen had earnings here last night. That stock is trading up significantly here, approaching its 52-week high. Is that a new 52-week high for Philip Van Heusen there, Joel?
Yeah, it is. That stock previously had a 52-week high at 93.06 back on May 2nd. You're just bumping along 94.30 here in the pre-market. It's up $6. I'm not sure if the numbers can be that good, but a whopping 900 shares have traded in this stock, so be careful on this one. 94.30 is your only reference point. You had a bunch of highs at the 92.40, 92.81, and then of the former all-time high at 93.06. So if you're trying to protect some profits on the long side, you get below that 93.06, and you're looking at pretty nice air.
Man, this thing really had consolidation from June to August. Bottomed like a billion times. It looks like they're in that 75 handle. I guess that would have worked out well. You could have bought off that 75 multiple times, and now it's really working out well with the stock approaching 95. Just to give you the earnings, it was a buck 25 against estimates of a buck 20, and they did raise guidance as well. So they said a lot of good things. And these stocks can be volatile. Sometimes you will see stocks like Ralph Lauren get a sympathy move, but I mean the retailers are kind of all their own trade. They're all their own stocks for a certain. So the sympathy plays haven't been working that well. But keep in mind that a stock like Ralph Lauren could move a little bit with a PVH up move like this. What do you think this overall market? We obviously said we've been in this huge tight range here this week. Some of your Big Ten have been in tight ranges as well.
Yeah, I looked up. I was like I discussed with you before we started the show. I'm said, well, maybe it's time for a block. This market's got to break out or break down, and you just pointed out how typically slow this week is, and how you may not get a move until next week. People come back from Labor Day. You still just have to be talking about this whole 1390 handle, and as much as one wants to be bearish this market, you just got to wait until that level's taken out. I mean, just from a technical perspective, every time we've got in that 1390 handle, we got a big bounce. 1395 was the low on Friday. On the other hand, you're getting these when you're getting these rallies, you're getting into these new 52-week highs and several all-time highs. We are seeing some huge offers in the book. I mean, you have to agree with me there that we are seeing more institutional selling going on up at these levels than we are buying.
Yeah, you're seeing definitely some institutional traders take some money off the table in some stocks there, but other ones are keep continuing to break out. Like I mean, I haven't seen like if you look at Apple, obviously we know the whole deal with yesterday with Samsung and just moving up there. But what do you think of Apple here?
Look, I think it's going up. How's that?
Is it
If
gonna?
I come in every day and I say I think it's going up, then I'm bound to be right. It hit 683.10 in the pre-market, so that's my big number that I'm looking at on the upside. 680.87 was yesterday's high. It hasn't been able to approach that in the pre-market. Just bouncing around all over the place. The pre-market high, very spotty trade to 678.50. But at this point with Apple, you just have to wait for a double. If you want to get short this thing or you're looking to exit it, you just got to wait for a double or triple bottom and then a break below it. Because I've been saying that on the weekly outlook for like 3 weeks, and it hasn't even come near doing that formation. So at this point, technically, it's hard to make the call, but wait for a technical formation that has some validity before you predict this thing going
I
down.
do want to highlight that gap area though, because obviously the stock gapped up yesterday, and yesterday's low 673.54 is what I have. If it starts to take out that low, then you do have that whole gap area because the stock closed the previous day down around 664. So you do have like a 9 or 10 point gap in the chart there. We always say gaps tend to get filled if they start to trade into that area. Obviously we held up, in most of the day yesterday, but we did start to drift down. And I think if this stock started to trade below 673, it could fall down to that whole 669 area, which you had that triple top there, Joel, too.
Yeah, I think you just have to wait for either a market washout, a downgrade by someone big. Obviously, you saw the downgrade from Oracle Investment Partners last week based on valuation at 650. You've seen what the street's done to them. Maybe if one of the big boys came out and downgrade them or whatever, or an iPhone blew up in someone's face or something. I mean, it's just that the momentum in the stock is just unreal. And also, if you look at it from a from a fundamental perspective, I mean, you still got a PE under 20.
Yeah, and you do have new products possibly coming out there next month, too, so that's going to continue to put upward pressure on the stock as well. Let's move on here. You've got other stocks in the Big Ten. Chevron Corp. I actually had a nice trade, I thought, on this one yesterday. Right off the open, you were highlighting that 112.30 level. I actually put my order out there to sell it right off the open at 112.30. It opened up and didn't give me the fill though. It opened up right at my price. It gave me a leaves. I got 42 shares only, and the stock just tanked. So I was pretty ticked off that I only got a partial fill on when it opened with 60,000 shares.
What do you think? What can you do to combat that? Do you think you have to put like 200 shared
I
orders
think you got to
from?
put your price lower. You've got to have it. If you want to get filled at 112.30 on that opening print, put your price at like 112.20, and then maybe you'll get included in the print. If it opens at your price, you are not obligated. The designated market maker on the floor does not have to give you the fill. If you put that sell order in before the market opens at 112.29, it opens at 112.30, you are obligated to get the fill. So they are obligated to give you the fill. So that's the whole trick. If you're trying to pick your point exactly, sometimes maybe throw it a few cents below if you're doing those OPG trades anyways with the New York designated market maker.
Yeah, well, that's it got it right into that 1230 resistance area. Pulled back from it yesterday, getting a little boost in the pre-market. Little favorable ink in the Wall Street Journal how they were stockpiling cash. So you still have to look at that area as resistance. Above that, you start to get really you have a lot of air in the stock above 112.39, up to the 7 and 8 day highs in the mid 113s, and then the all-time highs at 113.87. Coming back on the downside, that close at 111.73 should be excellent support. Similarly, Exxon Mobil, I mean, just this thing is just it keeps sneaking into the 88s, but can't get back up there to take out that size at 89.
Yeah, it's trading a few shares at 87.98, 87.99 here this morning. So trading up just slightly in the pre-market on 700 shares. But it seems like every time this thing gets into the mid 88s, it runs into more sellers too. We know there was this big institutional seller kicking up there at 89. You know the high frequency guys are in front of him in the 88 90s. And it seems like that every time it gets up into the higher 88s, other traders come in and sell it too. So it's tough. I guess you play the range on this thing. You had that triple bottom that you were highlighting on the weekly outlook down at 87, and then that whole 89 area is resistance up there. So when this thing gets in the upper 88s, it finds sellers. Gets in the low 87s, it finds buyers.
Yeah, trying to protect profits on the long side. I think you're in good shape until you get some closes below 87. IBM just kind of been up and down, up and down.
Tough one to figure
Yesterday,
out.
yeah, yep, yesterday happened to be the down day. I know they did make an acquisition, so I'm sure that cast a little bit negative news on
Right.
it. But this thing just had, it had a few days where it flirted with breaking out over 200, but lo and behold, it's right back in the 195 area.
Yeah, the whole 200 area is starting to form some sizable sellers up there now. I think that's still going to be your major resistance, but now that it's pulled back, like it did look like it had a reversal day on Friday, but then they did that acquisition, and then that obviously brought the stock down a little bit yesterday. I mean, I think you got to keep an eye on Friday's low, which was 194.20. That needs to hold to keep this little rally, the 2 day rally intact. We start to take that out, I'd start to get real nervous. But I still expect just range trading here. I think if you're playing, you play the previous day's highs, play the previous day's lows, because I don't think you're going to see a heck of a lot of volatility out of anything this week.
And moving on to our next stock, Mr. Softy opened right up
Yeah,
into that
yeah,
resistance on Friday. I don't know if you were able to catch that off the open, but
close.
that's about that's about as good a topping formation as you're ever going to see in the Big Ten or any other stock. If that thing can get back above the $31 level, probably going to go to 31.01.
I mean, here's the stock. It has flirted with this $31 level 4 or 5 times in the last few weeks. It flirted with it. It got over a little bit back in July, got over a little bit back in June. So even if it gets over 31, then you have some chops at 31.05, 31.11. I don't think I could get really bullish this until it started getting over 31.20. But yesterday, yeah, it was opening. It was a nice setup. It was opening. Maybe some of our traders got it. It was opening right into resistance. Unfortunately for me, I put my order at 30.98 to sell, and it only got to 30.96, so I missed it by a couple of cents. And the stock did obviously sell off after that, so it would have been a good trade, but wasn't able to participate. Hopefully, some of our traders did because we were highlighting that technical resistance level yesterday on the show.
Also, from a technical perspective, as it did sell off, it came right into Friday's close, which was 30.58. Monday's low 30.59. So when you get a gap up in a stock and or a gap down, coming back when it reverses course, the close is really would be a good target on several occasions. Do you even want to talk about GE?
Bring it up, bring it up. So basically, same thing here. We've been highlighting it. Didn't get into the 21s yesterday. It tried to sniff up to that area, though. Got as high as 20.95. I'll tell you, there is sellers all over the place in the 21 handle, starting at 21 even. Over 300,000 shares I can see in the book right now, selling up at 21. So you've got significant sellers from 21 all the way to 21.20. Just institutions are dumping the stock up there. I don't know if they know something, but they keep coming back with more and more sell orders. Every time this thing gets in the 21 handle, it finds sellers.
Yeah, take a look. Like if you do a snapshot here and you go back to some activity at the end of March and early April, you really kind of had the same kind of pattern where it just tried to stick its head over 20 and then just got beat down several times, held up there for a couple weeks, and then finally had a pretty good breakdown. Now it looks like you're getting a similar formation here at the $21 level. So until you get a couple closes above that, could be looking at a low risk swing short here in GE. Our next stock, AT&T, just been bumping around between 36 and a half and 37. Couldn't quite get back up to Friday's high, 37.04. Stopped just short there at the 36.98 was the high, just above the close. You have any size kicking around at 37?
Little bit. There's some institutional sellers there, but nothing huge. But the range is pretty defined in this. We had 3 or 4 bottoms there down in the whole 36.45, 36.50 area, and then it just gets into a little vacuum area and goes up and starts trading 37. So I would still call the upper end of this range probably the whole 37, 37.03, 37.05 area. And the bottom end, if it starts to drift down, is still around 36.50. So if I'm a range trader, I'm loving this. I'm probably selling it in the high 36s and buying it in the 36 and a half area.
Yeah, moving on to J&J. Resistance has come down since this stock had that parabolic run, made a multi-year high at 69.75. It's had some sell-offs related to some drug trials with Alzheimer's. Now the line in the sand's at $68. You've had multiple highs. 3 of the last 4 highs have been above 67.90. An institution probably targeting 68 as an exit point. Excellent support down here at 67. We hit that one day when it had some bad news, and we hit that after going ex-dividend. So the range 67 to 68, a break below 67 here could spell some trouble, though, for J&J.
Yeah, the stock still, like we were saying yesterday on the show, if the stock stays below 68, I think you got to play from the short side. If it can start to get above that 68 level, then maybe you could get bullish. But definitely yesterday, that was the play, and it sold off. It got right up to 67.95 and then just turned around and reversed course.
Okay, Wells Fargo, triple top. I was looking at it when it broke above 34.20 yesterday because you had Thursdays and Fridays highs, 34.21, 34.22. It goes a big 3 cents to 34 and a quarter, and then comes back and settles just above the $34 level. Major consolidation here. It just seems like the sellers are just stepping it up in the 34 handle, not being able to get back up to that 52-week and multi-year high at 34.80. But once again, just kind of the song remains the same. The stock has been in a point range now here for almost the entire month.
Yeah, really tight here. You're just kicking around. Every time it gets into the low 34s, mid 34s, it sells back off, gets into these upper 33s, and it finds buyers again. It's tight. You just got to play these ranges. That's the kind of market we have right now. If you're playing for breakouts or breakout downs, it's not working because we don't have the kind of volatility to get the follow through moves. So that's the play, is I play those ranges. You know, when it gets up to the upper end of the range, you probably got to be a seller. When it gets to the lower end of the range, you got to be a buyer. It's the same thing as we're going through all these stocks.
I know it's like a broken record
Yeah, it
here.
really is, and that's the key. That's the kind of market you have to trade. The kind of market that you're in, and the kind of market we're in is a low volatility, range bound market. It's predictable. We're obviously sitting here with 4 more days this week of holiday trade, for lack of a better word. You've got traders that are literally not trading. They're just not here right now. They're taking time off, and there's just probably not going to be a lot of volatility.
Yeah, finally in the Big Ten, Pfizer, after taking out that big seller at 24 on Friday, could have got back up to 24.01 and then slumped only a 14-cent range there in Pfizer. Below that 23.87, you got a little air down to the double bottom 23.70, 23.72 if you're looking for a dime on some trades. Just to close out the show, going back to the E-mini S&Ps here, looking at a longer term chart, or even if you're looking at a daily here, last few times we got up to this $1,400 level. Once was back in March, and we didn't hold up there very long at all. Held up there, had a good sell-off, reapproached that level back in May and sold off again. But now what's puzzling me is we've hit these levels and we're just hanging here. We're not whooshing off them. So could be forming a base to go up higher, take out the high of the move at 1424.75, and you got to close back from November of '07 back at 1429.75. But boy, I guess selling premium in the auctions has been the call over the last few
Yeah, it
weeks.
sure is now, but now with the muted volatility, if you're selling premium now, I think you're kind of late to the party because the VIX is so low, the option premiums are lower. And I mean, you do have September coming around, and obviously you could get more volatility once we get away from this holiday trade. So if you were selling premium in August, good for you. I don't know if I would turn around and start be dumping September calls on everything here because the VIX is just so low right now. The premiums aren't that great, and if you do start to get some volatility, you could get hurt with that play. So that was the play up till this point. I just don't know if it's the play going forward.
Okay, that's our show for today, and we'll be back with you tomorrow.